Do you ever wish you could get inside the head of a professional trader and understand why he does what he does? And with that professional trader explaining his thought process in detail with real trade examples that trader made, how valuable could that be to your trading? Well, in this video, you get that opportunity. Bar by bar, SMB trader Justin Spiro breaks down some trades he took with his exact thought process. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City and proud to have developed numerous 7 and even 8-figure per year traders. We hope you agree this is the top YouTube channel to help you grow your trading account.
Here are just a few things you'll learn today. You'll learn the significance of short-term moving averages on the daily chart and how to use them to your advantage. You'll learn the psychology behind what's going on in a low volume consolidation in a stock that's in an uptrend nearing a higher time frame resistance level. You'll learn the true definition of a blow-off, which will help prevent you from trying to short a stock that you think is overextended, and this could also help you make more money on the long side before the big turn. Finally, you'll learn what to look for in order to initiate a multi-day swing and much, much more. All right, everyone, welcome back to another Bar by Bar. We have the interns joining us, and they're going to ask some good questions, and we'll jump right into it. So there was a lot to trade this week, but I handpicked 3 trades from this week, and we'll go over them. 2 of them are in Carvana, and 1 of them is in Nvidia. So we'll take a look at Carvana, and we'll start off on the daily chart here. So you can see that Carvana has been in a downtrend, and it's below all our key moving averages here. So it's below the 200, 100, 50, 10, 20. But you could see here in June, it reclaims all those key moving averages, and it turns. What's interesting to me is that it set up this level here around $30, this resistance area, and you could see that it started to form lower highs. So you have a low, a higher low, and a higher low. And that's bullish, and it tells me that buyers are stepping up and willing to support the stock at higher prices, which is bullish. Another thing that you could see here is that it starts to hold key short-term moving averages. So when I'm looking at a daily chart, I like to look at the 9 EMA, the 21 EMA, the 10 SMA, and the 20 SMA. And really strong stocks are going to support the 21 EMA and the 20 SMA, and then when they're really gearing up to go and there's a strong trend, they will hold that 10 SMA and that 9 EMA really well. So leading up to this day of this $30 breakout, what we see is this interesting pattern here where volume really comes out of the stock and it starts consolidating above the 9 EMA and the 10 SMA. We see it holding up on the daily as volume compresses and thins out. And you can see how low the volume got on these days of this consolidation here. And I want to talk a little bit about that. So when you see volume compressing while a stock holds up on the daily chart, it can indicate that a bigger move is on the horizon. And I want to dig into the psychology behind that a little bit. So first off, when volume compresses during the start of an uptrend, it suggests accumulation. So basically you have smart money quietly accumulating shares, which causes the price to hold up on low volume. Volume compression could also reveal indecision. So as volume declines, it indicates that participants are kind of hesitant to make moves and they're waiting for like a clear market direction or a catalyst to participate. And like dwindling volume kind of reflects like a lack of conviction. So most traders, aside from the smart money, they're kind of just waiting on the sidelines for a clear move before they participate. Lastly, as the trading range tightens, energy is accumulating. So when that energy is released, it could result in a rapid uptrend or even a downtrend as it breaks out of that compression. And really, once it breaks, new participants start to flow into the stock, and that could trigger a larger move, especially when a lot of eyes are on the stock. So This Carvana, it started to turn. We talked about how it reclaimed those key higher time frame moving averages. And something really interesting about Carvana is that it has the highest short interest of any other stock in the US market. The short interest is about 50%. So 50% of the float is short. 2 days before the trade, we get this compression here on low volume. And then something really interesting happens. If we zoom in, you can see that it is holding that 9 EMA, that 10 SMA. It dips below into the 20, and then the next day reclaims all those key short-term moving averages. So it reclaims the 20 SMA, the 9 EMA, and the 10 SMA. And then what you also get, if we take a look at this 1-minute chart here, after it reclaims those key moving averages, you get this really strong uptrend that closes on highs. It's just a very clean, slow-moving uptrend right up to this breakout area. And we'll zoom in on that chart pattern. So you can just see every time it got near like 29, 28, it failed. Each time it did that here, it did that here, it did that here. And then on this day, after this compression, we get this really clean uptrend into the breakout area. And I was just watching Carvana very closely because I was looking for that breakout, knowing that if it gets over this $29, $30 area with that short interest and breaks out, you could get a lot of short covering, and that could lead the stock to really squeeze. So the day following this uptrend, if we take a look, we just get a little dip off the open. And here's our first trade. We get this dip off the open, and it's on my radar. I'm watching it very close because I want to look for that breakout over $30. So off the open, there's not really much to do. You just get this dip, but what's really interesting to me is that we have a low, a higher low. It pops up above VWAP, but puts in a lower high and then fails below VWAP. So to me, like the psychology behind this, it's telling me, okay, well, buyers are willing to step up, but it can't really push through high a day and then fails below VWAP. So I'm thinking, hey, there might be some stubborn shorts in this that are saying it's just going to fail from this level again, and they're trying to take their short, and they think, it's just going to fail from this resistance level again. And that's a valid idea. But given what we just talked about on the higher time frame, like I would never look for a short in this area. I'm looking for the long. And this little move here, it just adds fuel to the fire, right? Shorts are getting involved intraday, and then you have it get back above VWAP, and then suddenly this volume just comes in over all of our levels here. So big volume comes in over $30. You could see on this chart I have marked off previous day's high, the intraday high, the opening price, which is significant because that tells us the stock is going from red on the day to green on the day. Good psychological level to look at, the opening price. And it's getting above the pre-market high. So really, it's getting above like 5 really key levels just in that 1-minute bar, and it's on really high volume. And that's your entry. You're getting long here. You get the volume confirmation. You have a clear higher time frame breakout, and you want to get long on this move, and your risk is the low of this candle. When you see really big volume come in, we're getting this volume around 10 o'clock in the morning, and it's the highest volume bar of the day. That's really significant, and that really confirms the breakout. So you're getting long, you're risking the low of this bar, and then you want to ride this uptrend. And an easy way to do that is, as I mentioned in previous bar-by-bar videos, is a great trade management tool called 2-minute bar trailing stop. And if you trail that 2-minute bar, you're going to end up getting stopped out just below this candle here as it wicks below this previous candle that touches 33. So really, really clean breakout trade there. But if you didn't catch that It also offers another opportunity, and it's a little bit easier to see on the 1 minute. So it's extended from the 9 EMA, so it's getting extended from short-term moving averages, and then it just pulls back, and that's a natural pullback after such a large and vicious move. And what ends up happening is it ends up holding that 21 EMA really well, and it starts curling up, and you could just simply draw a trend line. You get long as the trend breaks, as it breaks to new highs, and your stop is just below this recent swing low. Personally, I took this trade. I did not participate in this move, but I do think it's a valid trade for a momentum trade. It's definitely not as good of a trade as this trade here. To me, this is more of just like a kind of like a cash flow trade. Intraday, the risk reward isn't as good as this, so I would trade this. If I were to trade this, it would be with much lower risk than this A plus breakout here. So going into the next day, something really interesting happens, and it's very bullish. In the morning, we'll look at this 2 minute. We'll zoom in a little bit on this 5 minute chart. You get a dip in the morning, reclaims VWAP, and all day it holds below the prior day's high. It just holds above and consolidates. So the next day, my eyes are still on Carvana, knowing that the short interest is 50%, and this could have a really big move. On day 3, after the breakout, this is yesterday when we got the CPI. So the market is strong because CPI came in cooler. It's the lowest CPI reading we've got since April 2021. And the market is just in a risk-on tone, which is bullish for all stocks, but also bullish for Carvana, something that has such high short interest. And I was just watching it. I didn't really see any great trade opportunities here, but something that really caught my eye was how well it was holding over VWAP. So in the afternoon, it's not even able to pull back and tag VWAP. It's holding clean above it. And at the same time that this is happening, if we just take a look at the Qs, we see that as Carvana is holding up well over VWAP, the Qs are making new lows, and Carvana is showing relative strength in comparison to the market. A lot of stocks with low RVOL were just rolling over with the Qs and following the market. Carvana was doing high RVOL and did not care about this move to new lows in the market. So when the market starts turning back higher, I was looking at this $40 level in Carvana. So we have a high of day at $39.96. Carvana breaks this little subtle downtrend here, reclaims the EMAs, and starts holding above them clean, which we haven't seen in the last hour. You can just see it's above, below. Nothing really significant to take away from the EMAs. However, we get this little trend line break. Starts holding clean above the EMAs. And now I'm thinking, if this stock breaks out over 40 on high volume after it was able to hold up so relatively well compared to the overall market, this could make for another breakout trade. And there's an argument to be made that Carvana is now overextended. It's just gone from, essentially it's gone from low 20s to $40 in just 3 or 4 days. So it could be classified as overextended, but what I want to say about that is there's a term called a blow-off. We don't see a blow-off to indicate that it's time for a short. It's just doing very similar volume to the last 2 days. We're not getting any euphoria yet. And for those watching that aren't familiar with the term blow-off, it's used to describe a dramatic increase in price and volume in any type of stock or tradable asset. And it's accompanied by extreme euphoria. That's how we look at a blow-off. It represents a sharp increase in price and in volume, resulting in like one last surge. And the term blow off is derived from the idea that the market becomes overheated or the stock becomes overheated and the price action blows off like a steam valve, like releasing excess pressure. And as longs start exiting their positions and shorts capitulate and cover, what happens after that is like a snowball effect where people who are chasing it long realize that they're underwater and they start hitting out. And that's what puts in the backside. Like that is, to me, that's like the characteristic of what a good mean reversion trade or a backside trade looks like. And we didn't get that. If we think about a blow off, we could take a look at what that would look like. If we go back to AMC, this is an extreme version of that, where we're getting about, you can see during this up move, you can see that big increase in volume. And as it tops, we get like the highest volume of the move. And, Carvana wasn't like really showing any signs of that. So before you start thinking like a stock is overextended, it's up $25 stock, it's up 15 points in 3 days. Well, if you're not getting that blow off volume and that extreme euphoria, there's no point in looking for a short yet, in my opinion. And I wasn't seeing any signs of a backside. So I felt pretty safe to take this trade. And then once again, in the back of my head, I'm thinking about what happened 2 days ago when Carvana broke through 30. And I said, what do I want to see here for me to get long? I want to see one of the highest volume bars of the day through 40. And that's what we get. And you can see I highlighted that volume bar there. The highest volume bar of the day at around 12:30 in the afternoon. That is very significant. So again, to me, you have a lot of stubborn shorts that are trying to short this. They're saying, oh, the market is making new lows. Carvana is going to play catch up with the market, and we're going to get a move through VWAP, and it's going to trade lower. I'm thinking the opposite. I'm thinking it's very unusual how well Carvana held up compared to the overall market. I think shorts are in big trouble here, and I want to take advantage of that by getting long over 40, but only if there's big volume. And that's what we got. Now, I managed this trade a little differently from the $30 breakout just because the risk reward is not as good. So I get long right over $40 and it starts to have some trouble at 40.80s. And I'm definitely taking some off, and my stop for this trade is just the low of this bar. As it starts to hold these EMAs and starts to curl up, I feel pretty confident that it should not get back below this bar, and I set my stop at break even at this point. And then you can see that it runs into some trouble around 42. And the reason why I say it runs into some trouble is because we have some failed follow through new highs. The stock makes a new high at 42.22, tries to make another new high, only gets above it by about 20 cents. And then again, another failed follow through new high. It only gets above that previous high by a couple cents. And then it fails through these EMAs here, and that's what ends the trade for me. So a lot of trading has to do with pattern recognition. So, I just remembered exactly what happened when it broke out of $30, and I said, I want to see something similar to that. And it's set up in a very similar way where that high volume came in over 40, over that nice whole psychological number, and I just wanted to take advantage of that. So really pattern recognition from the previous day or the day before that where it broke out over 30. Does anyone have any questions with the Carvana trade?
Justin, I had one quick question just about the entries on both of the breakouts, both 30 and 40.
Sure.
Could you kind of describe like how exactly you're looking at that? Are you willing to get in when you see momentum and volume before the level actually breaks, or are you waiting for like the close of the candle? If you could just talk about that a little bit.
Yeah, that's a really good question. So in this case, I was waiting for the break, and I think last bar by bar video, we mentioned about like focusing in on the tape. So when I am seeing that the stock is setting up for a breakout, what I'm not doing is like I'm not staring at the chart and staring at the candles waiting for it to break through. I'm hyper focused on that time in sales and level 2, and I'm looking for, are the offers stacked at $30 or $40? If the answer is yes, well then I want to see what happens when the bids step up and start pressing up against that $30 or $40 level. And then I'm looking for those offers at $30 and $40 to decrement. And then I want to see that momentum come in. So oftentimes, like a really easy, and it doesn't always happen like this, but you'll see like the offer stacked at $30 or $40 or at any key level on any stock, because they're trying to defend that price, and it'll just look different on the time and sales. So for anyone that's an active J trader, you watch the time and sales and you'll notice that it's different. Like the offers at 30 and 40 don't look like the offers below that at any other random price. You could see that there is size there. So ideally, it's really easy when you have those offers stacked and then you see them start to decrement, because people are hitting the offer and they're taking the offer, and you're seeing that size decrement. You're seeing those green prints flood the time and sales. And for me, it's that like it's that pattern, like seeing that pattern on the tape and then just reacting really quickly as the level breaks or right as that offer decrements. And sometimes, it'll decrement extremely quick. Like they'll just take everything at the offer and it'll blow right through the price. But you want to be quick. You want to have your share set to what you intend to buy, and you want to be on the key ready to enter.
Awesome. That was super helpful. Do you think it would make sense to use any type of technology for when the level breaks to get in? Would that be a faster way than manually doing it?
Yeah, you could definitely put in a buy stop. Not really exciting technology there, but I think, yeah, you could definitely put in a buy stop. I know like a lot of traders like to do that. Personally, I like to be like more in tune with the tape, and I like to see that happen, because what I don't want to happen is like I don't want it to kind of like just cross that $40 and then like you're not getting that action on the tape to confirm, and then it kind of just like fails. So I like to do it manually, but there's absolutely nothing wrong with putting in a buy stop at 40.01.
Awesome. Thank you.
Sure. I have a question about the break 30.
Yes.
So I think a lot of the interns took this break and were kind of stalking this from the day before. But when Bello went over this trade yesterday, he was pretty critical of taking the break over 30. His view of it was that the stock hadn't built a base below the level and shown consolidation, and that it just moved into the level too quickly for us to want to take the breakout there, and that we wouldn't be able to control our risk properly if it turned against us. Basically, what do you make of that? And what did you see that made you want to take this trade?
And that's fair to say. Like, this happened really quick, and I didn't necessarily like crush this trade or knock it out of the park, because it did happen so quick. And Bella's right, it didn't form much of a base. But my personal view is like you just can't ignore that volume. Like, I love seeing that. I love seeing you have a key higher time frame technical level, and then suddenly it's 15 minutes after the opening range is set, and we know that 95% of the time the most volume is done during that opening range. So when we see like such large volume after the opening range is set that eclipses all the volume bars before that, I want to give that trade an opportunity, but more so if it coincides with like a bunch of key levels, right? So we had the prior day's high, we had the opening price, we had the pre-market high, we had the intraday high, and the most important level is that higher time frame resistance that is blowing through. So yeah, I think it's fair for Bella to say that, it didn't really consolidate underneath. It didn't really show that many signs of a big breakout. Um, yeah, but I think that for me, that volume bar is everything.
Makes sense. That's the reason I took the trade. So, okay.
And then Justin, I have one more question. Same day, but you mentioned the cash flow trade that happened shortly afterwards. So at least for me personally, that break over 30 was more of like a momentum breakout. So as far as reasons to sell, like that double stuff, for instance, is a really good reason for me to sell. If you're to take like that intraday resistance break, what kind of trade really is that? Like, is that more of like a tidal wave scalp where you're kind of just taking like the range below as like a price target? Or like what are your reasons to sell on that second cash flow trade?
Yeah, so I think I mentioned that I did not take this trade, but I just like when I do these videos, I really like to because a lot of new traders will hesitate, right? Like they'll totally miss this because they hesitate a little bit, and I just like to show like the viewers that there's usually always a second opportunity to get in, um, and this trade is nowhere near as good as this trade. But I do think that if you do enter this trade here, you want to see it work right away. And there are ways to keep your stops pretty tight for this. So you could see like it's holding well above the 9 EMA, holds the 9 EMA, pulls back into the 21 EMA, does a really good job holding, and then starts curling up. And then you get volume coming in. Um, so I don't think that you should be anywhere near as big in this trade as you were in this trade. It should be a lot less risk that you put on because like just the EV isn't there, right? But what you could do is you could get long and you could expect it. You could say to yourself, you could do a time stop where you say, this trade should work, within the next 5 minutes, or I'm going to cut half the size. Or you could say, well, we haven't gotten a close under the 21 EMA yet, so if we do get a bar that turns and closes below 21 EMA, I'll just get out. Not sure if that really answers your question perfectly, but for a trade like this, I'm going to be very nimble with it. More so than this trade here, where I'm buying, I'm accepting that my risk is a reversal of this breakout and it turns and gets below this bar by a few cents.
Justin, I have a question about that Carvana $30 resistance area breakout. So,
Okay.
you mentioned that this trade was an A plus breakout, and usually on our A plus trades, we want to get proper size in them. So my question is, are you hitting all the size you can at 30 whenever you see that decrement on the offers, whenever you see the time and sales speed up, and then you're in, boom, with all the size risking entry bar low? Or you get in once you see that, and then you're adding size when you see the sharp move away from price and the volume increase print on the chart?
No, I'm getting all my size. What I'm not doing is, for argument's sake, like I'm not getting in like 1,000 shares here and then 2 minutes later adding like another 1,000. Good breakouts, really good breakouts should work right away. So if I get in and it doesn't start moving higher and it's kind of lagging a little bit, that's not what a perfect breakout looks like. That's not what an A plus breakout looks like. So I'm probably going to cut half of that size if it starts to stall out, because sometimes what could happen is what we just talked about on the level 2 in time and sales, where all of a sudden $30 breaks, you're seeing that flood of green prints from people just taking the offer, and suddenly the tape just like totally stalls out, right? And it just seems like all those buyers disappeared and that action is gone from the time and sales, and it stalls out. Like if that's the case, that should not happen. People should still be buying this. Shorts should be covering their position. You should get like that consistent action on the tape and the time and sales. So if you're not getting that, you could probably save yourself a couple bucks, and you could just cut half your size and cut your risks down a little bit. Now we'll jump into Nvidia. So I think everyone should know the story here. Nvidia updated their guidance from like $7 billion to $11 billion due to developments in AI and their chips. So I was watching this downtrend here. So you could see, Nvidia has this move from like 300 to about 400, consolidates and holds its gains, which is very bullish. You could see that it's holding those key short-term moving averages. Pushes up against that high here, puts in a new high, but it's a failed follow through new high. But something interesting happens, right? It pulls back and it's surfing that 20-day moving average. It's holding it. It's holding its uptrend. It's strong. It's holding, gets above the 9 and 10 EMA and SMA, pulls back into the 20 again, and it's just surfing that 20. And what we also have here on the daily is a clear level at 430. It can't get above that 430. Gets close to it, fails. Gets above it a little bit, fails. Dips back, holds the 20 SMA, pops into 430 again and fails. And again, you could see volume thinning out. So it's very similar to what we talked about in Carvana with that compression. And then yesterday, we had the perfect catalyst. Well, maybe not the perfect catalyst, but we did have a catalyst for Nvidia to break through that 430, which was inflation cooling, lowest reading since April 2021. You could see that pop in the pre-market towards 430, and it's just consolidating at 430 in the pre-market. I've been watching Nvidia ever since that catalyst came out, looking for that next leg higher, and this should be a stock that everyone's stalking for the next leg higher. It's the strongest stock in the market. As of today, it's up like 220% year to date. Has a great catalyst behind it. AI, it's the hottest subject right now in the market, and we're just waiting for that next leg higher, and this could be the trigger for it. I love when unfortunately, it's not like a stock-specific catalyst, but typically I love when there's a stock-specific catalyst that coincides with a higher time frame breakout level, or even a negative catalyst that coincides with a higher time frame support level. And then when you get that break, there's RVOL there because there's news. There's RVOL because everyone's watching that key level. And that's what really makes the trade special, when you have that technical breakout combined with a catalyst. So this was similar to that scenario. First, I got in just a little bit pre-market. It was about 20% of what I intended on getting. But I just wanted to be involved since we had the positive catalyst, and it was just holding up at that 430 area. And the risk for that was just below this candle here from CPI. Off the open, we get the push higher above pre-market highs. I added a little bit, and then it comes down, and that's fine. What I was looking for was for the stock to hold 430. I want to see that resistance turn into support. And that's exactly what happens. And you could see that it holds 430 for about 6 or 7 minutes. It's holding VWAP, it's holding 430, it's holding our EMAs, and then we get the push off of 430 back towards highs, and this is the moment for me. I'm getting the rest of my size right in here. It proved that prior resistance could be support, and at this time the market is strong as well. So again, when we have a truly strong trend intraday, you're going to see that 9 EMA act as support. So I'm in the trade. It's going really well. We get above the high. Ideally, I would have liked to see like some more volume come in. I would have loved to see like one of those really high volume bars that we talk about to add, but we didn't get that, and that's okay. But stock is acting fine. It's surfing that 9 EMA. And then, it starts to stall out around 437. You can see I highlighted that here. So I locked in some profits, not like 50% or 60% or anything like that, just like 15, 20%. And then just waiting for that break in the trend, which happens here. And now what I did was I cut the position down to a third of the original size. And now I'm left with a third of the position for a swing. And just in case it breaks that recent high on the daily, which is at 439.90. When it breaks 430, my thought process is, okay, we have a positive catalyst that's moving the market higher. We have Nvidia above 430, but also that all-time high is less than an ATR away. The ATR on Nvidia is 12 bucks. So I'm thinking, hey, it could easily get above that 440 today and break out. It's less than an ATR away. My intention is to add back just in case it wants to break out. But I'm very patient about how I'm going to do that. So I'm watching it. It's holding VWAP, gets below VWAP. And now my thought process in here is I would love to see this stock now reclaim and hold back above VWAP. If it does that, I'm going to add back to my original position. And now what I have is I have P&L locked in from the morning, and now I have a core position on for a swing trade. So we see Nvidia reclaim VWAP, and at this time, the market's making new lows. I think that happened a little earlier. Let's take a look. Qs are making new intraday lows. Nvidia, not quite, right? So Nvidia is showing relative strength. The market starts to curl back up, coming back into VWAP. At this time, Nvidia reclaims VWAP, and I'm adding back my size versus this swing low. This swing low is my stop now for the trade. And now my intention is I want to hold this for a swing trade, for a breakout through all-time highs. And I'm in a great position, right? I locked in gains from the momentum trade in the morning, and I'm looking for this to close on highs to confirm the swing. When I swing a stock long or short, a big rule of thumb for me to activate the swing trade is a strong close on highs, or a really weak close on lows if I'm going to swing the short. And that's what we get. We close right below that previous swing high on the daily chart, right at all-time highs. And now I'm in a good position to swing this stock for a breakout. So coming into the morning, we get a gap up. Maybe every trader won't agree with this, but anytime that I'm swinging and I walk into a gap up, I like to pay myself for that. So I took off just 1/6 of the position this morning, just to lock in some gains. And then what I look for off the open is an opening drive. So I'm thinking, okay, Nvidia just broke out through that recent high, that recent swing high on the daily. It's at new all-time highs. I think that this stock could go to 450 on a strong opening drive higher. I'm going to take some more profits, and then I'm going to look for that 450, which would be about an ATR, right around an ATR from the prior close, just slightly less, and also it's a nice whole psychological number. So off the open, we had a nice push higher into 448. There's some resistance there. I'm scaling out about another 20%, pulls back, holds VWAP, makes another new high. It's kind of like struggling around this 448. I sell like another 20% of the position. It pushes up right towards that 450, and then it fails this little uptrend here, right into 450, and I'm just going to take the profits on the rest of my swing position. And just a little lesson here, most of the time in your trading career, you're never going to sell the top, you're never going to cover the bottom, and you can see that Nvidia did continue to trend into the end of the day. I do think that there was an okay setup here. However, I did not take it because I just don't love trading breakouts like in the middle of the day, especially if you don't really get one of the highest volume bars of the day. But I guess you could have taken a trade here when it gets above 450. It comes back, holds that 450, and you could get involved somewhere in here with a stop just below 450, and you can see it trended really nicely into the close. But either way, I think it was a pretty strong trade, a pretty strong swing trade. Does anyone have any questions with that?
When you're swinging positions, how do you manage your risk, especially if you're short?
Yeah, that's a good question. So I very rarely swing a short position. If I am swinging the short, I have to have a significant amount of P&L locked in, and I'm always risking a small portion of that P&L on the swing. The way I look at it is I accept the risk to 2-day VWAP. So if, for instance, I'm swinging this Nvidia long, I generally like to think that outside of like some breaking news, the worst that'll happen is like it kind of like gaps down to like 2-day VWAP. So I like to set the risk around 2-day VWAP. What I'm never doing is, say, just for argument's sake, I made $1,000 on it. Like what I won't do is risk that entire amount down to like 2-day VWAP, right? Because this swing trade, it's not as good as of a setup as this here. And just from observing some of the top traders on the desk, when they take a swing, they're just risking a fraction of what they made on that stock on that day. And that's like the general rule that I follow.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of S&B Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with S&B to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part? You don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.